VA Declassified, Secrets of the VA Home Loan Benefit, where we battle fake news, drop truth, and give you tools to succeed. Chris Bettis from Fluent Mortgage, VA Fluently. All right, so for fundamental, just getting through approval process, if you look here at the screen real quick, that three-legged table, right? So we have the credit component, we've already covered that. For VA, since it's a benefit, not a loan, the lowest standards required to qualify. So that's a really easy leg to fill in, okay? The collateral, that's the home. We know it's VA, right? You can put as little as $0 down. So as long as it's just a residence, a single family, manufactured home, an approved townhouse or something, good to go. That leg's pretty much a guarantee. So really in terms of qualifying on your mind should be all about the capacity or income, how much can you afford, okay? So let's kind of work through this. And I will spare you the vector calculus. I'll spare you the nerding out, which I a lot of times like to do with you. 35 front end, 43. If you go above 43, then 125% of residual, and that's only your DTI, and then residual. And don't forget to add back in the per square foot and the, no, I got you, right? We're gonna talk to you a really good way to just kind of ballpark it. So as you're looking, as you're starting the process, you know about how much house you can afford. Of course, get pre-approved first and we'll tell you exactly. But here's kind of, let's break it down Barney style, right? So for income, obviously first off, make sure you're a veteran, active military, you serve, we have eligibility, entitlement, and everything from SCD, employment, retirement, annuity, social security, disability, anything that can be tracked, validated, or is on your tax returns. That's your income, right? So you plus whatever money is out there, that's our income. And so for this hypothetical scenario we're gonna walk through, we're gonna imagine that it's $5,000 a month. Now remember on your paychecks as an example, there's a big number, the gross income, and then the little number, the net income. So before taxes, after taxes. We're talking about the big number. So that number that shows up on your W-2 if you're employed by somebody else as an example. That big number. So however much you make per month, big number, okay? 5K in this example. The next thing we're gonna do, so there's your income, is we're gonna talk debts, right? So anything that's gonna show up on your credit report, plus the new mortgage. So if your cell phone doesn't report to the credit reporting agency, doesn't count. Your homeowner's insurance, lots of little utilities don't count. But automobile loans, credit card bills, any past student debt, anything on your credit report, plus the new home. So either we'll pull your credit and we'll figure out exactly how much, or use your Credit Karma or whatever. Of course, privacy, we're using a hypothetical, not real person for our GI Jane. So on this scenario, there's gonna be somewhere that's gonna show you what the total is, right? And so really, we just want the total of all payments. And so kind of a side note real quick, if you have an existing mortgage and you're gonna sell that house to buy a new house, you get to negate that payment, right? Because that house is gonna get sold, so that payment goes away. We don't count that. But literally in this case, autos, education, installment, open debts, credit card debts, whatever. So in this case, a really fiscally sound person with almost no debt whatsoever, they've got a $1,200 balance on a credit card, they pay $8 a month. That's our obligation. So it makes it pretty easy. And so here's the roundabout version of it. Literally, about 50% of your gross income, that big number, is how much you can use for your life, okay, for VA. Or a 2-to-1 ratio. If you make $2,500, you're gonna buy a house at $2,500 a month, you need at least $5,000 a month in income, right? Credit card is half the size of their income, so your bills are half that of your income. There's your 50%. Let's use that hypothetical scenario. So how much house can we get, right? How much house can I afford? $5,000, thank you, GI Jane, divided by 2, right? 50%, it's $2,500. That's the max. Then we wash away anything on the credit cards, anything on the autos, anything that's on the credit report, that summary, right? So luckily in this case, almost no debt, $8. So 2,500 minus 8 means we can have up to a $2,492 payment for that house. I mean, that's a lot, right? A $2,500 payment almost. But remember, that's house, taxes, insurance. No mortgage insurance because it's VA. You can put zero down. You don't have to deal with that like civilians do, but total payment. And if there's a homeowners association, throw that in too. But your house payment, right? Up to $2,492. So the fake news. VA loans aren't good. Do a civilian loan. Not even close. It's a benefit, not a loan. You can buy so much more house because they'll let you go to a higher debt to income ratio. You can buy so much more house because it has a much lower payment. So in terms of you trying to max out how much house you can buy, VA is the way. So that fake news is, we know, greedy bankers are realtors who just don't know the truth, unfortunately. Old news, fake news. Hopefully you got the truth. In general, 2 to 1 or 50% of the income can be used, okay? Tool. Now that we've known this, right? You look at your W-2, you figure out all of the income you make. You look at your credit report. Yes, I can afford $1,800 a month. Here's the free tool. And obviously you can just call us, but what I'd say, as always, we try and give you everything we can all in one place, right? So all you gotta do, go to fluentmtg.com. Here, I'll take you through real quick. So fluentmtg.com, click on the calculators tab at the top, mortgage calculator. Of course, we're not doing some conventional loan. We're going VA, of course. Interest rate for today, we'll go 2.25%. That is real. And here we go. Now, obviously we want a higher payment, so we're just gonna start bumping this thing up, right? No, we can afford a little more, we can afford a little more. Can't all do this right too much. So right about there. $2,493. That's within $1, right? And obviously property taxes vary a tremendous amount in the state. So in terms of mortgage, that's set at a 2.25 on $510,000. The mortgage is only $1,991. Shocking. Interest rate so low. Taxes, though, we don't know for sure. Homeowners insurance is just a guess. I said $65 a month. So as a rough number, 2 to 1 or 50% of income, this person, G.I. Jane, who has only $8 debt to her name, who makes $5,000 a month, should be looking, if she could afford a $2,500 payment in her life, in her budget, in her mind, the VA should be saying, yes, go get your $500,000 home. All right, guys. We battled fake news. We dropped some truth, and the tool is to go to the website and then just calculate your loan, your terms, your payments yourselves. Don't forget to like. Don't forget to subscribe. Don't forget to share. But most of all, I'm pleading with you, use your home benefit. If you're going to buy a house, don't let a greedy banker or an uneducated realtor steer you into a civilian loan. There's nothing like VA. VA is the way to go. VA Declassified, guys. See you next week.